Welcome back, everyone, to another episode of Paradisos, where if you change your thoughts, you can change the world. That is right. That is right. My name is Dennis, for those of you who don't know, and I am back with another installment of a guest recording. And man, I'm excited for this episode. Today we have Ben Graham from Trading Experts. If you guys don't know who trading and what Trading Experts are about, you're gonna know today. So Ben, why don't you tell us a little bit about yourself, a little bit less about what you're doing exactly and what you do for fun, your hobbies, fun facts about Ben.
So, you've known me for a couple of years now. Going back probably 2-3 years. We met through Trading Experts.
Yeah.
So, me and a partner of mine, we formed a company to teach people how to trade. We came up the same way. I traded penny stocks in 07. I bought banking stocks in 08. I traded options. I traded leverage. I did all the things that the traders want to do and lost money as a result of that. And you just kind of learn and progress as you go through. And after having a lot of these conversations with the same people in the same, situation, it gets very frustrating to hear the same, oh, you lost 100% buying some options. I did that 10 years ago. You should just not do that.
Right.
And after having a lot of those conversations, it's why can't we just kind of help that person avoid that? And, that's kind of how we came about with Trading Experts.
So what about a little bit about yourself? What do you do? What you like? Talk a little bit about, that sick ass Aston Martin that you got. I think you like cars, right? You probably have a classic car.
I actually just got it back today. I had the whole front end repainted.
Oh, okay.
So shipped up. But yeah, cars. With your own vacations. We just came back from. We did Bimini a month ago. We did Turks and Caicos the month before.
Nice.
We did a Whistler trip. Back in December. Obviously, we're big fans of reading. So I think I'm at the 17th book this year.
Nice.
The 180th in the last 3 years. So very obviously the car. I'm looking at it because it's downstairs. It's parked up front.
Yeah.
But yeah, we obviously big fan of cars, big fan of reading. A lot of things that can make money.
Nice.
So don't make too much money.
So for those who don't know about the famous what is it? 2.8 GPA
2.4.
license, 2.4. Why don't you talk a little bit about that? What's that about?
So, never was good in school. Never failed any classes, never dropped. Just wasn't very interested in accounting or, just stuff that just didn't entertain me.
Right.
So I never did very well education-wise. Just did enough to get by. You actually needed a 2.5 to graduate from Railpo, the college I went to, but they kind of pushed me through because they had these trading competitions, and every semester I kept winning.
Okay.
And then when you win, you have to go in front of the faculty. They give you this big cheesy check for $200. And oh, how'd you do it?
What's the competition for?
It was a trading competition.
Oh, nice.
So they're bringing me in front of the faculty, the dean. And they're well, how are you doing in school? I'm I'm actually on academic probation, but I'm the stuff you guys teach in the classroom has nothing to do with how you actually invest.
Right.
So this is why I'm making 50% in a semester, and why Timmy, who's in second place, is making 4% because he's listening to what you guys are teaching. So maybe rubbed some of them the wrong way, but the dean kind of was just get this kid out of here. We don't want him here anymore. Get him his degree, let him go. He was, the dean was sitting back. He told me you can't work in finance. You should work in marketing. And then I worked on Wall Street for a couple of years. And, I'm still on Wall Street now. So there's just a lot of those things where it's people anchor towards the high GPA, and with certain things that's definitely right. If you're a doctor, you definitely need to know what you're doing. But I think with a lot of other skill sets, you don't really learn them in the classroom, and a lot of stuff that we teach, you're never going to learn in the classroom. You're never going to learn in an MBA program because they teach you on the book, and the book is going to tell you about X, Y, Z stock, and not Apple. So we, talk about things that are really happening, not something that happened 50 years ago or in the perfect world that academia kind of falls into.
So how would you say you overcame that sort of negative thought that was placed inside your mind, oh, you shouldn't work in finance, or even before college, like you said, you probably weren't that good in school, I wasn't, I was told that one of my dreams was to become a baseball player, and I wanted to become a baseball player up until high school, and I felt like I was good enough. That's all I knew. I ate, pooped, slept baseball, and when I got to high school, my coach, when I made it onto, I got cut the first year. Second year I made it, and I was told that I wasn't good enough to make it pro, and then my dreams were like shattered, and then I never overcame that, and so I got into other things. So how did you overcome not being that great in school, and being told that you weren't good enough for finance, you just stick to marketing?
I think there's like two main things. One, I think with a lot of people, it's like they always want to, like, if the coach told you that you couldn't play pro ball, and with a lot of people, it's like, oh, screw that coach, he's wrong. I'm going to prove him right, or I'm going to prove him wrong. And I just think that's like a mentality where it goes very negative, where it's like you're just trying to prove that person right, when ultimately, like, that person, even the dean, I could walk by that guy right now. He has no idea what, like, I frankly don't know what he looks like. The car salesman who, like, wouldn't let me test drive the Aston. If I walk by him, wouldn't notice him, wouldn't care. So what I'm trying to say is, like, if the dealer wouldn't let me buy the Aston, it was like, I want to prove myself that I can buy it. Or, he said I couldn't work on Wall Street, like, I'll prove to myself that I can work on Wall Street. So it's more of, okay, if you say I can't do it, like, I'm going to go do it, but I'm going to go do it for myself because I want to, not to come back like a year later and be like, haha, Dean, I got the job and you said I couldn't do it. And I think that was, kind of giving like that motivation, but more in a positive direction than trying to, like, prove that person wrong. I think that was, like, the main thing.
And what disadvantages does that have, that wanting to prove other people wrong have?
I just think it just puts you in, like, just a negative mindset where it's like you're always like the victim when you're the one getting up every day. You're running this podcast. Like, someone else can't force you to do that or force you not to do it. So it's more of like, if my goal is to work on Wall Street, like, what do I have to do to get there? If my goal is to buy the shiny new car, like, what do I have to do to get to there? I mean, if the person says I can't do it, most time when people say that, it's just because they can't. It's like, I got to here as a dean, or I got here at XYZ jobs, I did this, like, you have to do it this way. And it's not always the case, because things are always changing. Like, even podcasting 20 years ago wasn't even a thing.
Right.
Guys making millions of dollars a year doing it, but they started this years ago, and they, now they're getting good at their craft. It just takes time. Most people just aren't that patient, unfortunately.
So talk to us a little bit about your morning routine. What does that usually consist of, and why does it allow you to conquer the rest of your day? Is your morning routine a big part of your life, or is it something that you just and then you usually just conquer on your the rest of your day?
So, like, again, I was never really like a really crazy morning person until I started working on Wall Street. And I was just late to, like, almost like a boot camp where it's like, I had to leave at 4:15. I didn't get home till 9. And it was just like, it got you in that rhythm where it's like, okay, I'd get home, I'd go to sleep at midnight, wake up at 4. And it was just like, you got to work
repetitive.
Yeah. And you just get in that, like, that routine. So obviously now I don't wake up at 4 in the morning anymore. I probably get up at like 6. I read a little bit, shower, get ready, scan the market, go through all my client accounts, go through my personal accounts, go through, our members trading. So I kind of have like a list of things that I do kind of throughout the day. I was reading in the morning, I always read at lunch, I always read in the evening, I go to the gym in the evenings. So, like, with everything, we all have like routines that we're like just consistent with. And I just kind of have like that checklist where it's like, to order, the most important thing first. And then by the end of the day, obviously the gym is important, but if I got to manage someone's account, $1 million, and that's going to be a little more important than doing 30 pull-ups in the gym.
Right.
So I try to stagger it, the most important to least, and get rid of some of the noise.
Okay. So is there ever a time where something, well, you kind of gave an example, but maybe give another example as to when you have to, like, get out of that routine?
I mean, I feel like for myself, at least, it's like every 3 to 6 months, there's something where it's like, so here's an example. So the last like 6 months, I was setting like 20 goals a month, knowing that obviously I'm not going to exceed all 20 goals. I'm just being very realistic. It's like, these are 20 goals that I'm aiming for, all different, whether it's, getting in shape, whether it's reading, whether it's business-wise, whether it's money-wise, all these different goals. And I was realizing that, yes, I'm setting high goals, intentionally to fail to just kind of raise up where I'm trying to aim towards. But I started realizing, I'm like, a lot of these goals can be consolidated down to maybe 5 major ones for the month, and then maybe a dozen bigger goals for the year. So instead of having 20 things that I want to do in a month, I'll narrow it down to what are the 5 most important, one in each of those categories, and then just focus on that. And if I focus on those, say, 5 major goals instead of the 20 smaller ones, those other little ones kind of get picked up just through the process of getting towards those few bigger goals. So that was something just more consolidating what I'm focusing on versus trying to make sure everything else is kind of working perfectly day to day.
So in other words, like you would set those small little, like those 15, 20 small goals aside, and then somehow through the month while trying to achieve those 5 major goals, they would get achieved anyways.
Yeah. So say if it was like for reading, for example, it's like maybe a daily goal would be like read 100 pages in a day. And then maybe the monthly goal is to read $6. If I'm reading, I'm probably going to read 100 pages anyways. And I'm probably going to read a book a week. So pretty much reach that 5 book anyways, versus having to say like, damn, if I read 100 pages or was it 80 pages? Oh, damn, 20 pages. So it's like, no, not that 4 chapters, not that a quarter of a book. The average adult reads 1 book a year. You did that in 4 days. Like, you're good. Just kind of focus on the broader picture. And I've been doing that the last like 2 or 3 months, and it's been slowly starting to help, where it's just you're more focused on those 2 or 3 or 4 main things that you're focusing on versus trying to just juggle everything, day to day.
So why do you, and I know you yourself are big, like you're big on goal setting, and one of the big goals that you've set for the trading experts alpha chat is what is it, 5 million altogether throughout the year, and I'm sure you guys are on your way, on track to setting that goal, hopefully. Why is goal setting so important, and talk a little bit more about how one can overcome, say, procrastination. I'm sure you're very big and against procrastination. Why is goal setting so important, and how can someone get over that sort of procrastination to achieve that goal?
So remember when we met at Beauty and Essex in the city over the summertime?
Yeah.
You're talking about your clothing website?
Yeah.
And I'm like, just make the website, just open it. And you're like, oh, well, this gotta be good. I'm like, yo, just tell me a date when it's gonna be done and when it's gonna be live. And you picked like a month later. I think it was July 31st, right?
Yeah.
You wrote it down. You texted it to me. What happened?
Oh, it didn't happen.
But did you open the site?
Oh yeah, I got the site up. Yeah.
Of course. So but now if we sat in a conversation, you'd be like, yeah, Dennis, you definitely should do that website. Like, you'll do it one day. And all right, whatever. It was like, no, like, pick a day, write it down, text it to me. I'm going to annoy you for the next 2 months until it's up. And then once it's up, the process just begins. Okay, now who's your first customer? Who's your first prospect? Who's your target market? Who are you going to talk to? And it was just like, you saw that firsthand. Like, you obviously had to force you to make your website, but that was a perfect conversation where if it was just someone saying, yeah, go, you'll definitely make a website, and it doesn't go anywhere. But it's like, when you want to have it done, and then do it. And even if you miss the first deadline, who cares? It's in your head anyways. But at least now you say, okay, maybe I could do it by next month, and it makes that like dream more of like a realistic goal. And that's something that I picked up from one of my mentors back in the day, where it was like, for my IRA, it's like the most you can put is $6,000. And it's like in your head, that's it's a lot of money for most people. And he goes, oh, geez, it's $100 a week. So you have $100 in your pocket. I'm like, yeah. He's okay. Well, put $100 a week in your account, and then it's done. And I'm like, oh, that's actually really easy. And it's once you kind of have those conversations a couple of times, you hear the same people saying the same thing. Like, oh, I want to do this. And say, okay, how are you gonna do it? Oh, in the summertime. Okay, summertime. Well, I want to relax now. I'll do it in the fall. And then in the fall, I got work. And it's like nothing ever happened. So
it's the vicious cycle.
Yeah. So we just like cut it out. Like, tell me a day, and I'm gonna follow up that day and see where you get.
And it's funny that you mentioned that, because there was this author that I had an interview for the podcast a few months ago. His name is Philip Adcock. He is the author of Master Your Brain, one of my favorite books. And me and my brother actually have been like just praying and just, damn, I wish this book was an audiobook, because my brother and I are really big on audiobooks. Even if we do have time to like sit down and actually read the book, speaking for me anyways, I like to have the Audible playing in the background, just only because I can cut out distraction, because if I'm reading just without the Audible, and like I start to wander, and then my mind goes somewhere else. But if I have the Audible playing, I can concentrate and just fly through pages and capture so much more quickly. So when I spoke to the author, I told him, man, why isn't your book an audiobook? And he told me it had to do with the publication. So he gave me the email of his publicist from the publication, and I told him, if you give me that email, if you give me communications to that publication company, we'll set a date together. And I picked the date. I think it was September. I have it on my phone here. September 1st. Let's see. Yep, September 1st. Master Your Brain, need to be an Audible.
Oh, yeah,
So it was like, he was like, all right, cool. So I'm gonna with his like British accent, I'm gonna write that in my journal. And September 1st, I expect it to be an Audible. I was like, bet. So I emailed Barbara, which is from his publicist here in New York too, and I was like, hey, listen, I could start a GoFundMe. My name is Dennis from Paradiso's podcast, and a bunch of my friends, including myself and the co-host, my brother, are dying to have Master Your Brain by Philip Adcock as an Audible. What can we do to make this happen? If I can start a GoFundMe and have people donate to get it started, to get a jump start, hire a narrator, whatever it takes. She said that we can't really accept funds, but I'll let the publisher know, and we'll start working on it. And boom, it's already starting. So I can definitely relate as to setting that day and getting someone to hold yourself accountable. It's all about accountability. If you have someone who can, like you were, like every 2 months, yo, is the site ready? Yo, is the site ready? Yo, are you working on it? Yes. So if you have that accountability always on your back, and always, and it's not really, I feel, in my opinion, it's not really like haggling you, or like putting pressure on you. It's believing that you have the potential and not allowing you to slack off, not allowing you to procrastinate. So I think that's a really big thing. So talking a little bit, you said mentors. What can you, and I'm sure you've probably had many mentors, but can you name a couple of like key like life ideas that were giving to you that you still hold closely to your heart and you use, on your everyday life, whether it be on trading, whatever it may be?
Well, I think especially with the accountability, it's like me hammering on you like every month about the site, and then you eventually got it up, you started bringing sales. Like if I have to make you accountable towards you starting that, if I'm working on, like we got the app for our company on the App Store, you can download it. Like that took us like a year to do, but when everyone knew that we were working on it and said, okay, we got past this first phase, like we submitted the approval through Apple on like December 25th, and we're like, January 1st, we're good to go. You guys are going to download it in 5 days. And then we learned a very hard lesson that like Apple is not that easy. It took us like 2 months to get through that final approval process. But the fact that if I'm going to make you accountable and try to get you to open your site, or I'm going to make, Tommy Brennan, who's 17 now, who I've been talking to since he was 14, max out his IRA. Well, I got to make sure my 401k is maxed. I got to make sure my SEP is maxed out. I got to make sure my IRA is maxed out. I got to make sure my parents' IRA is. I have to make sure that if I'm telling that person to do something, to read every day, or to max their account, or to invest properly, I have to do the same thing. So if I have to hold you accountable, or I'm holding my members or clients accountable, I have to be also doing the same things. So it also kind of keeps me in step, because I can't say, Dennis, you better go read this book tonight, and then I'm gonna be sitting there watching Netflix. It's not right. And there's people that do that, and like in our industry, it's like, I meet with advisors who are 60 years old, who manage a few $100 million, and they're the worst traders in the world, because they never learn how to trade. It's just they know how to sell. So in every industry, you're gonna have it. You'll have it in real estate, construction, anywhere you're gonna have those people. But we want to always focus on make sure that we can give value to you, to members, and just make sure that we can help them first, and then just rules of reciprocity that's going to come back to us, tenfold.
So in other words, something that a mentor taught you is like, if you hold someone accountable, make sure you're doing the same damn thing.
Yeah.
So I had the notes here. So if talk a little bit about fear and why fear holds people back in life, in general, in trading, in everything. Why do you think fear is such like a deadly weapon and like a deadly emotional attribute to people that just hold them back so like furiously?
I don't like people anchor towards fear, just like an easy word. I think it's more of like worrying. So people are always worrying about when the bills are going to come in, or can they take the vacation? Can they go out to dinner? There's like a lot of that worry, or is the market going to crash? Is the housing market going to crash? Is like all these like crazy things. It's just the plane going to crash and I'm like hit by a shark. I'm like all these like things that people tend to worry about. Where if you really break down like the numbers, like the facts, it's like the odds of me getting, me being in a plane crash is less likely than me getting struck by lightning. It's like, okay, well, probably this plane's going to be fine. Or, the last 100 years, the market's averaged 9%. There's been crashes in between all those. And if at any of those times you bought at the absolute peak of the crash, like right at the peak before it crashed, you still made money. If you bought in 08, you're up 300%. If you bought the absolute top back then. So there was a book that I read, How to Stop Worrying and Start Living by Dale Carnegie. It's like a classic. And I'm not really a person that much. But so I didn't really want to read the book. I don't worry about stuff like that. So I read it, and it was like one of my top favorite books in the read. There's so many of these stories that relate to every like marriage, about all these little stories in it that can relate to someone else. Okay? I think I mailed that book to probably like 50 people. People get married, people get divorced. There's so many stories in it. You really get through all of it. You can relate to the things that you do worry about. You realize you're like 99% of stuff that I'm worrying about doesn't really matter, or it's never going to happen to begin with. So it's like, why do I care? Why am I going to waste the time worrying about if the world's going to end, the dollar's going to go to zero, and we're going to be flipping for bullets? If that happens, like, who cares? Like, we get to that point to be there, but it's probably not going to happen tomorrow. Like, I'm probably still going to go to work. I'm probably still drive my car at the top. And I'm like, more likely it's going to be fine, and just people want to just worry a lot. And I think that's to kind of help that person off that ledge of,
So if worrying is it's where it starts, where does it even come from then? Like, wouldn't worrying come from sort of fear?
I think it's more like a lack of education. So it's, if I'm relating to the market, like even right now, if you think back, the beginning of the year with the worst start of the year, the end of 2018, we were down 30% off highs, but again, we were up every single year, record numbers. If you just bought and forgot about the market at any time in the past, you destroyed it. And then what happens though is when a little bit of fear comes in the market, we're talking about 3 months out of 10 years, we had a little bit of a panic where the market closed back off of all-time highs. Right. If you had bought in at the all-time high, 3 months prior to the crash, today you didn't lose $1. Right. We're back at highs, But what happens is the person who doesn't understand the market or doesn't understand, whatever they're trying to do, they buy at the high because everyone else is doing it. It's just social proof, like, oh my God, he's buying whatever stock, I need to buy it. And so you just buy it, you don't know what you're doing. There's no plan. It starts to go down. You think it's going to go to zero. You sell it. You lose money. It goes back up to exactly where it was, like where the market is now. I go, oh, I'm such an idiot. But this time it's going to be different. And you buy it again, and the market pulls back, and you like repeat that process of just doing the complete opposite. Where on our role, especially for the people that I talk with, when I talk with new traders, I'm like, what are you looking at? Like, I'm looking at Tesla. I'm like, Tesla's down like 40% this quarter. I don't care if they got the coolest car on the road. Like, if their stock's getting smoked, their stock's getting smoked. Right. Just focus on what's expensive. But when I look back to myself, when I first started, like, I bought penny stocks. Like, I bought the stock that I traded General Motors the day it went bankrupt in 08. When they're like, at 4 p.m., this stock will be worth zero. And at 9:30, I'm buying 1,000 shares and selling it 5 cents higher. I made like $40 after commission, but it was like, the stock went to zero. I was that stupid to trade it when there was 8 hours of the company left. Right. So I can relate to those people, but it's just like, you just want to like shake them, like, no, like, I've done this before. Like, it's not, it looks like fun, but it's not. And, we can't help every single person, but the guys that do take onto it, they're the ones that can benefit from, and that's, who we have to kind of focus on.
All right. So before we go to break, I want to talk about two more things. Are you a fan of journaling, like for
Yeah.
yourself? Okay. So why would you say journaling is important in one's self development in becoming a better person in general?
I think there's like a few different, like, so we journal for trading.
Okay.
Very simple. Like, even for me, it's a couple lines. Screenshot the chart. I bought here, I sold here. This is why. This is where I messed up. Maybe my stop was too tight. Whatever. That's just for to improve as a trader, because when you have all these trades, you forget a year ago you took this trade a year ago. You sit again now and you look back, you're like, this probably will happen. Let me not do that this time. Then you have like the journal, like you said, like for personal development. I did that a lot, like in high school and college. Like every day I had like a journal, and what I noticed, a lot of it was kind of repetitive. Like a Monday through Friday, it was like went to class, went to the gym, hung out with so and so, whatever. So I tried to like skip it to just journaling of like what I did, what was fun, what was exciting, what did I learn from it, like stuff like that. That I don't do as much anymore. Now it's like we have social media, like you pretty much can just know what you did by the stuff you kind of posted. But I think there's a lot of different type of journaling that you can do. For us, for trading, it's just much more fact-based. It's not really opinion-based, because it's like, okay, we're buying 100, our stop's 99, we're trying to sell at 105, and it's like just very to the point, where it's not like, oh, I'm emotional today, stuff laying by, like that stuff that like we don't care about, because that's just not how the market works. I think journaling is huge, though, especially if you do it consistently.
Okay, and one last thing. What is your current book, and what did you learn about your previous book? So current book, what do you think about it? And then what did you take most out of your previous book that you read?
So I just started this book today. It's Big Small. I'm gonna do this one. It's Big Small Changes by Robert Sinadani. I might be murdering his name, but he's like a big guy in human psychology. All of his books, like top 5. The one previous, Made to Stick, was a really good book I just finished. They had like a really good example on like discrimination, and they did a study back. This was like in the 1960s, and it was all white class. They had the blue-eyed students and then the brown-eyed students. So the teacher goes, okay, the blue-eyed students.
Oh yeah, I know that study. Yeah.
And then the next day they switch it.
Yeah.
And they say, oh no, we messed up. The brown-eyed students better, and they showed the difference of how confident the better. So there's a lot of those like little things that like some people will never get to experience. When you actually read it, and then you hear back from the people like 30 years later of how much they learned from that experience, it's like, it was very shocking. But I think this year the most important book I think I read was The How to Stop Worrying and Start Living by Dale Carnegie. That book I've sent to the most people. The Go-Giver is a really awesome book. Just again, it's about giving. It's very simple. It's a very short book, but those are there for me.
So one, if you can think off the top of your head, one key element of that Dale Carnegie book, what is it? If you can take away one thing, what was it from that Dale Carnegie book?
It's just literally like whatever you're worrying about is probably not going to happen. So just enjoy it. Just whatever you're like worried about, it's more likely not going to happen. And if it does, you'll learn from it and you'll move on. But it's too good of a book to summarize in like a sentence or even like a paragraph. It's really perfect examples. I have a buddy of mine, he's a cop, they have PTSD when they have a traumatic experience. So he was worrying about his job. And I'm like, Mike, you're a great cop. I've been doing this for years. Like, this thing happened, but you did the right thing. And I just sent him the book, didn't even tell him. He just got it. And then I'm like, just shoot me a text when you finish the first chapter. And like, he got the book 2 days later, Amazon Prime, whatever. And he's like, this is the best thing I've ever read. He's like, I was going to like a psychiatrist, hasn't been anything. He's like, this book hit home so hard. And like, I was never read a book in his life. And I don't think he's finished it yet, but he's probably at least like halfway through. And it's just a book that like, there's so many different stories that it's going to relate to someone in some way, and they'll benefit from it.
Or if it doesn't relate to you, then at least you have the knowledge for when, God forbid something does happen like that, where, all this worrying comes in, all this stress, then you know how to handle it.
Yeah. Even like with friends, and like, even you have a friend stressing about something. Like when I read it, I was like, hey, there's this one story that's going to relate to Mike. Like, I know when he gets past this chapter 1, it's going to relate to him. And so maybe it didn't directly benefit me, but if my buddy Mike is reading it, or my buddy was about to get married who was way too young, there's chapters there on that. So there's like a lot of these different things where it's like, okay, maybe it doesn't directly benefit me, but I know someone that it might. And if they get to read it, then that's great.
All right, perfect. So we do actually have to go to break. But when we come back, we're going to speak more about books, definitely go into trading experts and what anyone can do to get into trading experts, which is pretty simple actually. And yeah, a lot more stuff. Ben, thank you again for coming on to Paradiso's podcast and just speaking to the people about trading, life, books, and cars. And yeah, we'll be right back with more. And we're back. If you're just joining us, which would be weird because if you listen to a podcast, you don't usually start in the middle like you would a radio show. But hey, we're back. This is Paradisos. I am Dennis, and I am having the honor to sit down and speak with Ben Graham from Trading Experts. So let's jump right in. Before I go over, what my notes consist of, I actually wanted to ask you a question about investing. I figured I was going to wait till the end and ask him when we were off air, but I figured, most people would probably have this question too. So when it comes to offering a percentage of your company for capital, how does paying that investor back work? So like I've seen episodes of Shark Tank where people, go on, I'm asking for $400,000 for 10% of my company. So how would it work paying that investor back their investment, of course, and then after they get paid back what they paid for their investment, how would it work after that?
I mean, there's going to be so many different variables. So say you come to me and you're like, okay, I need $100,000. I want to go, build out a store. I want to start something product, X, Y, and Z. The person you look at and like, okay, what's your track record? What's your business plan? What's your revenue been already? And then from there, it's, if I got to give you $100,000, you're going to go, make 1,000 t-shirts and you got to sell them for $100 a piece. I'm going to want to get that money back first. But it's just, for that type of question, it's like, it's got to be much more narrow because there can be 1,000 different, it just can go on for days on all the different ways to get paid back. But with any loan, if you owe someone money and there's interest involved, say it's 10%, I give you $100,000, you owe me $100,000 back plus 10% interest in a given year. Let's say you didn't pay me anything. That means end of year one, you owe me $110,000. So, okay, and year one, you have $110,000 you give me back. Okay, cool. If not, that interest is going to keep building.
Right.
Kind of pay that back. So, with that type of question, if it's a very specific example, you can definitely dive into it. But broadly, it's just, if you're taking on debt, you just want to make sure you can pay it back, and you pay it back by selling a product or a service. And, when you have that business plan, the person who you're going to is going to look at you much more serious than if you say, I have this great idea. Because every person in the street has an idea, but most people don't sit down and write down, like, this is my target market. This is what I want to go after. This is how I'm going to market. This is how I'm going to sell. This is my price point. This is my profit margin. Like, once you can explain all those things with confidence, that person is going to take you much more serious than if you say, I have the next Facebook or the next Instagram. Like, yeah, whatever.
Yeah. So let's say that person is investing and is not only expecting interest, but it is, now has a stake in the company. So would that stake, let's say 10%, would that stake be given to that investor, every quarter, every month, every year? Is that something that's discussed?
That's going to be broken out between that person. Most people in the beginning don't want to give that person the interest, like the 10% of the company, the 20%. When in actuality, like, you kind of do, because that person. So if you're going to the person, say for $100,000, they already have money. They've already probably done something in business. They probably know a little bit more than you coming into the game. Right. So if you give someone $100,000, okay, whatever. But if now you own 20% of that company, you have, like, the person who gave the money has, like, an incentive to make that company work. So instead of just writing off the check and moving on with their day, they'd much rather, like, look, I'd rather get 20% of this and be able to help you grow this business much faster because it's going to benefit me as well. So, like, if it were for me, I would rather have, like, give you a fixed amount and then I would own a part of the company versus, like, it being a loan and wanting that $10,000 on top of the 100.
Right.
Everyone's different.
And let's say if you get that loan from an investor, he gets a stake of the company, and then how would it work when the time comes of that company wanting to buy out that investor? let's say the company's flourished, it's worth $1 billion now. Is that something that's written in a contract where it says, okay, if we're worth this amount by this time, then you're going to get this amount and you have to basically leave?
Yeah. So like you said, definitely want to have a contract. But most of the time, if it's already like, when things are working well, especially if the partners, like the business is growing, the partner you're working with is helping you. Most people don't really want to sever that relationship. Even for me and my partner, like I always want to work with my partner because we work so well together. It's never like, we're doing great now, can I buy you out because I don't want you a part of it?
Right.
So there's.
All right. Awesome. Sorry about that, guys. We had some technical difficulties, but we are back. And Ben, it's the moment of truth. Let's get into trading experts and what is it about. I have a whole bunch of questions about it, and just let it roll. So what is trading experts? Nice. Yes, I saw that. Nice. Fire. All right. So what is trading experts?
So Trading Answers is a company that teaches new traders how to successfully swing trade in the market.
Simple, right to the point. I love it. All right. So why was Trading Experts created?
Awesome. So a little background on myself and pretty much every new investor. I started back in 2007. I was in high school and did some trading simulation, like a history class, and like murdered everyone. You started with like $100,000. It was paper money, so again, it means nothing. But started with 100 and like turned it into like 200 million. Again, paper money, nothing real, playing a video game. But I like murdered my class. So I was like, I think second place made 101,000. Give me $1,000. I like had this crazy. So I was like, oh, this is easy. I definitely can do it. I had a business in high school. I was selling candy. So I had money coming in. I was making like $200 a day. I had 5 different schools that I was selling sour straw.
Wait. Sorry to interrupt, but how did you do so well? Like, you had any knowledge in trading at all?
No. So my first little come up, I was selling candy, and I just kept hiring all my buddies at all different schools. I had like 5 different high schools I was selling candy in. And they were like, think like little Sour Patch Kids. They were like individually wrapped. They were 25 cents a piece. Yeah. And everyone loves candy. It was really the easiest sell ever. So you got 5 different schools. You got 20 people sell candy for you. I had a bunch of mopeds that I would like give out to my like salespeople that like did the best. So I had like money for a high school kid, $200-$300 a day profit. That's like people's salary. Right. They make that, and I'm in high school driving a moped, making that kind of money. So I had this like just box full of quarters, like a treasure chest, because everyone paid in quarters and dollars. And I was like, okay, I just killed it in this simulation. Let me go invest it in the market because it's going to be so easy, just like this. Right. So like everyone else, they had the little chunk of change they put in their account. Back then I was using E-Trade. In 2007, it was like $18 a trade. So it's $18 to buy and then $18 to sell. Jeez. People now complain at Robinhood when it's for free. And I'm like, I used to pay $34 round trip to buy like 1 share of Apple.
And I thought $9 in TD Ameritrade was a lot. Jeez.
Yeah. So again, started with penny stocks. Back then, this was like pre-Tim Sykes, pre-Twitter, pre-Facebook. Like Facebook was still like, MySpace was still relevant back then. Yeah. No one even thought Facebook was like a thing. Yeah. And they used to send these like these brochures in the mail, and it'd be like the next Exxon or the next fucking app or whatever. Yeah. So these glossy brochures, and then promises of rich, it'd be $100 bills in the pants, whatever. So I would buy a couple penny stocks. Just you get 100% loss, 100% loss. One would go up, make 10%. You'd brag about it. So I did that. Then I got into, trading like the $2 names, like the Sprints and the John McCain's and the Fannie Mae's. But same thing, huge losses and then very little gains when you're right. And through that, all through high school, kind of phased out of that into college, started trading like the Netflixes and then the leverage ETFs, which like right now there's like the JNUG or the DJAZ, all those like Drexion ETFs that are just absolute trash. And like we have a store in high loss, like 60 grand trading those. Because again, you get good, or you think you're good. Yeah. You 8,000, you make 10,000, and you mess up one time and you lose 60. And you're like, I don't know anything. And then fast forward, I graduated college just barely, 2.4 GPA. got a job on Wall Street at a prop firm. I had my partner Shake there. And then once we finally got to that point, like for me, I had gone through, the 6 or 7 years of just doing everything wrong, everything that majority of new traders do. New traders go into the market to be unique. They want to invent this new investment strategy. It's going to be better than the rest. Yeah. And what they end up doing is what everyone else does. Right. They rush to the riskiest thing humanly possible. They go to options. They go to penny stocks. They go to a stock that's down 99% in the last decade.
They go to Forex and all of that.
But the second they buy it, it's going to miraculously become the best company in the world. Right. So everyone tries to be unique, but they end up being, like in my case, the sheep, just being in the crowd doing the same exact thing. And from doing it firsthand and then seeing how we were able to transform, we also noticed that the average person isn't going to get this advice on their own. You can read every book in the market. You can go watch every YouTube video, but there's just too much information. There's too much going on. There's too many different ideas where we just simplify it. We're like, this is the process. If you do this, if you finish step one, you'll know this, guaranteed. You'll know much more than you the month before. And it's just getting them in that habit. And then, a month later, 2 months later, 3 months later, they can trade without us. But most still stay because, we do have a community, we do hang, it's more of a, actual community than like just a business.
Right. So it's great that you mentioned community because it leads me to my next question, which is who was Trading Experts intended for when you first created it?
So for me, it was actually directed at myself because I think of myself when I first started, there's no way I would have ever joined like a service. I had too much of an ego. I could teach myself. I could figure it out. But yet, when I learned how to snowboard, I learned from my older cousin. I learned how to ride a motorcycle, learned from my father. When I learned, when you go to college, you learn from your professor. So all these other walks of life, we're always learning from a mentor, someone who has real experience. And then for whatever reason, and it's specifically more geared towards males in the market, that they can figure it out. It's like macho man, I'll figure it out myself. And when I look back at myself, if I would have had myself now teaching my 17-year-old self, I'd be so much farther ahead. And we have a member, Tommy Branner, he DM'd us, this was 3-4 years ago, he was 14 years old and sounded just like me. I want to learn how to invest, blah, blah. And I'm like, all right, whatever, you're 14, you're too young. Like, it's a business, it costs money. I can't charge you, you're too young. But I'm like, you know what, I'll give you one program, you complete it, I'll send you the next one. And to pretty much give him the test, because even right now, if I send you all of our material, you're not going to read it. As much as you say you will, the next person, you're not going to read it. But if I send you the first one and you complete it, and I know you did it, okay, now I'll send you the next one. And then I'll send you the next one.
It's incentive to continue to want more.
Yeah, it's not even an incentive. It's just that we can weed out the people who say they want to do it versus people that actually want to do it. So out of, say there was 100 Tommies that were 15 years old or 14 years old who wanted to join, he was the one who, we gave him the material, he did the work, we sent him more material, did the work. And long story short for him, Tommy's now 18. We just opened up his Roth IRA. He maxed it out, $6,000. He's got probably $25,000 in his Robinhood account. Saves weekly. Is still in high school. Trades while in school. I talked to his mom. His mom is the sweetest lady ever. And he's reading all this crazy stuff where I'm like, if I was that person, if I was Tommy when I was 15 and I had myself, I would be 10 times farther than where I am now, but I started 6 years later. So for those people, we can speed up that learning curve where in the beginning, everyone thinks in a week they're going to know everything. And then 5 years later, they're like, I still know nothing. Where for Tommy, who came in at 14, now he's 18, I have guys who are worth $2, $3, $4, $5 million. They'll have an idea and Tommy will be like, that's the worst setup ever. The stock's at 52-week lows, is breaking out. Why do you want to buy that? And the guy hits me up. He's like, who is this kid? I'm like, no, Tommy knows his stuff.
Tommy is Tommy.
I'll take any trade with Tommy, whatever he wants to buy. He bought Amazon for $1,000. Anything Tommy wants to buy, not even a thought, I'm buying it with him. But it could be a guy with $5 million who doesn't know anything, and I'm like, nah, this idea isn't the best. Yeah. But it's really not money is the knowledge. It's knowing what to do. And for someone like Tommy, he knows that. So helping people like that, it's awesome to hear, especially when he calls me or his mom calls me and she's like, Tommy wants to open up a Roth. None of his friends want to do that. I'm like, yeah, because your son's really smart. Tommy I ran a plan for him. And if he continues to max out his IRA, continues to save how much he saves, when he's 65, he should have about $25 million. 20 of it will be tax-free because it'll be all in his Roth. because he's so young. He has so much time in front of him, and he's already a really good trader, and he saves a lot. Where I can work with a guy who's 50, who's got $1 million, and he still won't get anywhere near time because he has so much time on his hands.
Exactly. And it's a real testament. There's a saying that says, if you work constantly, diligently for 6 months straight, you're already 5 years ahead of everyone else. So that's a real testament to, what Tommy is doing and what you're capable of doing in other people's lives.
Yeah.
So next question is, what have you learned personally from after creating Trading Experts?
I think the biggest thing for myself, and we spoke about this a little bit before, was like, you kind of have to practice what you preach. So if I'm telling you, like, we're buying high, we're selling higher, I can't buy a stock if it's super close. If I'm telling you that people blow up trading options and I might see a good deal, I'm still not going to touch the option. If I'm telling you, you got to read every day, I'm reading every day. If I'm telling you got to max your IRA, I got to maximize. So for me, a lot of the rules or the stepping stones that we kind of keep in place, it also keeps us accountable in the same way. Like for, me and Shape, we have to go to a newsletter every weekend that we send out for the week ahead. We have to make sure there's always trade ideas for our members. And it's kind of a give and take where it just keeps us kind of working. When you're kind of trading by yourself, and this was even like when we were at our prop firm, people think of like a prop firm like Wolf of Wall Street, where everyone's like screaming and everyone's super high energy. And any real trader knows who's worked on the floor. You walk in, it's dead silent. You can hear a pin drop. You got headphones in, saying anything. And as much as it's like a collaborative environment because everyone's there to make money, there's still like, again, just from our experience, it was like everyone was just still for themselves. Like if I'm buying, back in the day, it was like we're buying Clack through 44, it's probably at $140. Today, it was like I'd be buying it at 44 and then I'd be calling it out at 45, like a dollar later. Yeah. Where it's like, Clack's at 43, guys, I'm buying it through 44. My stop's 43. I'm looking to sell it at 48. And it might not go for a day or two, but at least you guys know what I'm looking at. And that's that group that we've kind of culminated in the alpha chat where like no one's allowed to complain. Like if you complain, I kick you out. Yeah, it's like no, because it's like you just bring that energy. It's like bad days, but it's like if you complain, like you're gonna bring that out. If there's no setups, you're not gonna find any setups. But if you're optimistic and you are constantly looking, there's always gonna be an opportunity. So we just like focus on keeping like our alpha chat like very tight. All the guys looking at the same thing. Everyone's kind of on the same page. And there's sometimes where we'll fire a member because some people just still want to be the black sheep, and that's great for them. But when we got millions of dollars in the market in specific names, like unfortunately that one person, if they're going to drag us down, they kind of have to go. And that's just you got to just stay consistent with what the goal is.
So just to get a little bit off track here, you mentioned just people who have a bad energy or who complain, they're out of here. So for someone like that, of course they're gone, they get kicked out. But how would someone be able to overcome that negative, not having to complain? How would someone be able to overcome that, that fear of, or is my trade gonna work, or damn, what happens if I get shaked out, or all of that? So how do you overcome that?
So one, again, like I said, like the group that we're in, everyone is always looking top right. Everyone's always looking forward. No one's like, I don't care. No one cares what happened yesterday. Like you go on like a lot of these, I'm in a lot of these Facebook groups just to kind of see what the market is like, what markets are doing. And you go in these like Facebook groups, 50,000 people, and everyone's like, last week, what will happen? And it's like, that means nothing. That's completely useless information. Doesn't have anything to do with anything. So we're always just looking forward. And again, with anything in life, the first podcast you did, you probably were like, I'm gonna, and then you've done so many now where it's like, this is a cakewalk. Yeah. So for us, it's like, it's just the at bats. It's like that first trade, yes, you're gonna be a little bit nervous. The second trade, you're gonna be a little less nervous. And then by the 50th, 100th, it's just another trade. Any trade that we talk about, like I bought Dunkin' Donuts today. We just bought CSX, trade company through 76. Like they're all the same trades. There's no emotion. It's like I bought 76. My stop was 75. It's at 77 today. Moves it up to break even. If it's wrong, I don't care. If it goes back to 82, I'll peel some off. Simple. There's no like, well, they're a train company and they move a lot of stuff and Warren Buffett. It's like, no, I don't care. It's just like right to the point. And in the beginning, you ask a new trader their idea and it takes them 9 hours to explain it because this and blah, blah. And then if you slowly start to learn, the simpler the person can explain what they do, tends to be the more proficient they are. I'm saying I'm proficient, but just from the people I've spoken to, very quickly I can gauge their experience just by how they talk and how long it takes them to explain what they want to buy.
Right.
And,
So a little bit about that is how important to you personally, and to your students and who you teach, how important is it when you hear information about the market and the news and what the company is doing at the time, how important and how much is taken into consideration with all that information that sort of in the end determines what your trade is going to be?
So from a news standpoint, don't watch CNBC. I have no TV on of breaking news because it's really just noise. Anything on CNBC, really, if you really do the numbers and you really plot what the people say, it's always the opposite. When they tell you to sell, it's usually the time to buy. When they tell you to buy, it's usually the time to sell. They told people to buy Bitcoin at 19. They told you to sell it at 1,000. So anything on the TV or news, we don't watch at all. It's completely thrown in the trash. So if we're talking about valuable information, the news, the media, Yahoo Finance, Market Watch, Bloomberg, 99% is just useless information. It's just to have something to talk about. The only information that we ever look at is forward guidance. So 4 times a year, there's earnings seasons. Every company has to report their earnings, and every new trader focuses on earnings per share. Earnings per share tells you the past. Again, new traders love the past. Real traders care about the future. So you'll hear new traders like, oh, so-and-so beat earnings, but they're down 20%. Why is that? It's like, well, their forward guidance, they just slashed it, for the rest of the year. They're expecting to do less business this year. So people with real money hear that and they're like, get me out of the stock. So for us, the only information that we ever care about is forward guidance. You hear that in the conference call or in the earnings report. But the main caveat with that is that, again, the new trader wants to buy before earnings because they have some hunch that the stock's going to gap up. Every stock's always going to gap up with earnings. That's always the new trader hunch. Usually they're wrong. It's just a coin flip. I can't tell you what stock's going to gap up. I can't tell you what stock's going to gap down. I don't have inside information. I can't read their earnings report before you or I can. Well, what I can do is I can look at their earnings report and say they raise their forward guidance. Tomorrow I'll buy it. And more than likely, I'm probably still not going to buy it tomorrow because everyone else can be buying it tomorrow. And a good example of that, and again, we can't really pull up charts in this podcast, but GH is a name that we bought yesterday. So a month ago, GH reported good earnings. Again, they don't get earnings, but they had good forward guidance. So GH had gapped up. Now, it couldn't get above $80 a share, right? It pulled back to 76, went back up to 80. Couldn't break 80. Pulled back to 78, back up to 80. Pulled back to 79. And now we know they beat earnings. We know they had good forward guidance. 80 was a solid resistance level going back for 6 months. It could never get above $80 a share. So all we wanted to do was buy above 80. So yesterday we put in our buy stop, 80.05. GH breaks out. The low of the day was 79. It ripped, $4, which was 4% that day. And now today it's at 88. So we bought the stock yesterday. It's up 10% today. If we were wrong and we bought 80 and it didn't work and it failed, we would have lost 1%. Big deal. I could do that all day long and I'm never gonna blow my money. But that was a perfect example where we saw the earnings, we saw the forward guidance, we waited a month. Not that we cared, it just when the stock was ready to go, it's gonna go. Right. But we don't know when it's gonna go. The new trader wants it to go yesterday and they want to be in right now. We don't care. It's like it's on our radar. I can look at it right now. Okay, GH is 88, boom, done. But that was like a good example news-wise, forward guidance, only thing that matters. And after they report, more than likely the name is going to take 3 weeks, 4 weeks to kind of consolidate that big move it just had. Like if a stock just gapped up 20%, it's not going to go another 20% the next day. Right. But everyone just said, oh, it's up 20%. It's like, no, it's got to, you want it to settle out because then you can get people like us who have real money, cumulative, like our entire group, to really buy that and break that level. And that's just technical analysis. Just, there's people that are going to buy 80 the first time and sell at 76. It's going to be the newer trader. The semi-impatient trader is going to buy it the second time. We're coming in third, fourth, fifth, sixth time where the risk is so much tighter And the person who bought the first time, emotionally, like, I can't buy that anymore.
You can't go in anymore.
When they say that, like if I'm talking to someone who just lost money in GH, not a member, like a random person, I hate GH. I bought it a month ago at 80. I sold it at 76. Will you buy it now? Absolutely not. I'm like, I will 100% buy it because you will. If you want to buy it this time, probably not. But a lot of it comes down to like human psychology, and a lot of people overlook that aspect when it comes to trading.
So what is your end goal with TE, with Trading Experts?
So I think if you ask any person who like runs a business, they never have an end goal, because it just you're like, our main thing since day one has always to improve, to always add value. So if you had joined us 4 years ago, it was just an email. We just had posts on Instagram. There was no YouTube videos. Trolls will complain, you don't have YouTube videos. Okay, we'll do YouTube videos. Oh, you guys don't have a group chat. Okay, we'll do a group chat. You guys don't have free content. Okay, we'll give you so much free stuff that it'd be impossible to complain about how much free stuff we give you. You guys don't have a newsletter. Okay, we'll do 2 newsletters. You guys don't be your members. I'll fly them out to Turks and Caicos and to Zuma and to Bimini, and we'll go heli skiing. So for us, when we have like the people that have like that negative feedback, it's awesome. Like, yo, like, tell me, because you guys are giving us our best ways to improve. You guys don't have an app in the App Store. Okay, we'll get an app in the App Store. So a lot of our like major improvements have been from focusing on just trying to improve. But you like you don't know your weakness because you're subjected to yourself. Just like I don't know my weaknesses, but that other person who's looking at me can tell, oh no, your tie's undone. Oh, okay, let me fix it. So there's never really like an end goal. We always have like goals in general. Like we have a yearly goal, we have a 5-year goal, we have a 3-month goal, we have a month. So there's always a monthly goal, quarterly, yearly, annually. But there's never like, once I get here, I'm closing up shop and I'm going to move on, because that's just not in, I hate using the word entrepreneur, but like someone running a business, it's always just trying to grow it. Just want to keep watering it and watch it grow. And then you look back and you go, I remember when we first started and we had like no one for a year. And now it's like, okay, no, I can't bring you on because
we have too many.
Yeah. So there's never an end goal, but having, goals, this month we have a goal, for the year we have a goal. There's always goals. I always write them down on paper. So yes.
So for someone starting a business, so let's say someone who's like really good at coming up with ideas and then like implementing them and getting them started. In other words, what you're saying is that it should never be, in your mind, this should never be, I'm gonna start this business, it's gonna be successful because I'm passionate about it, and then when it's really big, I'm gonna move on to the next idea. I'm gonna sell it for what it's worth, and then I'm just gonna move on to the next big idea that I'm gonna feel passionate about, and then it's just gonna be that cycle. So that should never be in, say, an entrepreneur's mind or a business owner's mind.
So, like you mentioned, like, so even for Trading Experts, like that's my passion, like to help people financially. I do that as an advisor every single day. I do that for Trading Experts. I love to do that regardless. So it's not like if it ever becomes I don't have that passion, then that's just going to show in general. And I can look back at, when I had like a limo and an exotic car rental business. Like it was a lot of fun. It was like my first service business. I got behind the wheel and I drove a limo more than anybody else. So I was like the owner, but I would still show up and like take you into the city or take you to Hoboken. And that really wasn't like, I didn't, as much as I love cars, like I don't want to fix cars. I don't, I'll go get it fixed. I'm not going to like change the oil. I don't want to, like, I just want to drive. Like I have fun drifting the limo in the snow, but I don't want to like change the alternator or clean out this guy's throw up. Right. There's certain businesses that like it's good to get in them because you can see if it works. Like, I know the limo business makes money. I know I was still able to compete with Uber, as competitive as it was, because offering a different service. You're pulling up in a limo at a club, you weren't pulling up in a Honda Civic. So it was a different clientele that I was kind of working with. But I don't want to book limo rides or book perm rides or book weddings. Like that wasn't my passion, but it was a fun business to learn from. And I was able to take lessons from that into the next business. And like the main one I learned from the limo business was that anyone who got a free ride, and this relates to even the free information that we give out, any person gave a free ride to, like my friends, like the guy I haven't talked to in 5 years, but we got a beer once. Okay, no problem. I'll get you a free ride. Don't worry. Okay, you got 10 people. You want to go to Lebain in the city? It's a Friday. No problem. I'll send a limo to be there at 6. I'll have a bottle of champagne in the back. There'll be ice. There'll be the champagne flutes. There'll be napkins. Everything you need. You can bring your own alcohol. There'll be the little USB in the back. You'll have your own AC, your own intercom. You don't have to talk to the driver. Set. Door-to-door service into the city, back. That would be $1,500 ride. I'll pay for the driver, I'll pay for those, do everything. That person ever say thank you, that they ever tip the driver? No. Bennett, it's 6:05, the guy's not here yet. I'm like, it's Friday, 6 o'clock. Who's going to LeBain at 7:30? Like, what do I'm like, you're texting me, you're by yourself. The other 9 people aren't even there yet. Like, what are you worrying about? But then the people who paid $250 a person round trip, Bennett, the driver was awesome. He stopped at McDonald's on the way back. I can't believe you guys got us a bottle of Moet champagne. That was so thoughtful. I'm going to refer you to my buddy's wedding next week. He needs one. Can you do it? Of course. So the big takeaway there was like, okay, you can always give favors, but those people are going to look at that favor much differently than you do. And I look at it even with us giving out like free programs. 3 free programs. Don't have to pay $1. Don't have to give us an email. You don't have to like do any tricks. You just can read the stuff. You can say it as long as you want. You can leave whatever you want. Do whatever you want. But people will still complain that it's free. But then once they pay, then they start to read. Yeah. And that's like the trick. Like, well, why do you charge people? It's like, well, once that person puts their money down, now it's their investment. Now they want to recoup that money back, and that's when they really start to do the work. So, and I could even see it where the person working through the first 3 programs, which are the easiest, takes them the most amount of time because it's for free. But then once they put their money where their mouth is, they, game planning, 2 weeks done. Chart reading, a week. Trading psychology, a week. But it took you 3 months to getting started. But that was a lesson that I knew from the little business where it's like, I can't let that affect my day. I can't waste the energy that person, I can take advantage of it. I'm trying to help. I'll give you the information, but then it's going to come on you to do the heavy lifting. With that, I can't force you to read the book. Right. It's on you to do. So that was like a major lesson I took into Trading Experts that definitely helped me speed up that process where my partner was like, why are we going to give it away for free? Then they're going to use it. It's like, I kind of learned this lesson a little bit, like, let's run with it. And we, a year ago, we only had the 1 free program. Now we have those first 3 are for free. Right. And we continue as we continue to build out our programs. Now we have 12 of them, and we have so much of this valuable information on the back end that we're slowly starting to try to offer more of it free, but not having it where the person's not going to do it. Because it's, if everything's for free, they don't do it, it doesn't work.
That's my point. And it's so crazy that, that what you mentioned is the same concept. Let's say for someone going to the gym, if you're paying $5, $10 for a membership at say Planet Fitness, then you don't really have you're not being forced to go to the gym and work out. But if you pay for a trainer, $200 a month, $250 a month, it's like, damn, that hurts my pocket at the end of the month. I better go lose some damn weight and get in shape. And it's also a testament to, when I was growing up and I was living at home with my parents, my mom always told me, yo, shut your ceiling fan off, shut your light off. You don't pay for nothing. You don't pay for light. But now that I have my own place and now that I pay my own bills, it's like, yo, shut all these damn fans off. What is all these fans doing on? Shut the AC off. It's been off for too long. So, it's crazy how just, growing up and things in real life, it just all connects. So why are people hesitant of joining Trading Experts with your experience throughout all these years?
So I think the biggest thing is that there's just so many like scammers out there. And I've kind of toned it back a little bit because if you ever checked our stories, like every day there's a scammer, we would just be murdering them. And I don't even want to like give them the energy of of naming like these. And there's like big people, like people that like you look at their social media, it's like, oh my God, this guy's got a McLaren. And it's like, yo, this guy's a trash trader. Like he trades one thing every day. He makes like $100 with a $100,000 account. And then you go on all of his guys and it's like, I'm down 99% or I lost my entire life savings. Yeah. And it's so many of those people where it's like, you see a nice car, you see a nice watch, or you see the guy on vacation and it's like, you can do nothing and make millions. And it's like, there's so many people that do that. And it's so easy to portray that and really fake it, that it overshadows the real people in the industry. So if you ask any of our competition, like, do you have the Series 7, you have the 56, you have your 66, like, you an actual license? It's like, no, you're just a guy with an Instagram account and an exotic car and a Rolex, right. And you made money one time and that's all you got.
And you call yourself a Forex guru.
Yeah. So it's so easy to be that person that it's just hard to know who's real and who's not. And unfortunately, it just takes time to really weed out who is, the real deal. And a lot of people we talk to, it's like, oh, I was with so-and-so and I got smoked. And it's like, unfortunately we weren't there, but like at least you're here with us now. Like you learned that lesson. It's not gonna happen again. And now we can move forward. But there's just so many people in the industry that just aren't authentic that,
people are like, damn, I just want to stay away from it.
Yeah.
All right. So what has been your biggest accomplishment with trading experts?
I think the bigger picture, like most recently, we helped save, I think it was like $3 million in interest payments on helping a lot of our guys and just random Instagram followers. Interest rates have been dropping. So refinancing your mortgage has been like a slam dunk, huge cost savings. And again, the mortgage lender wants to sell you a mortgage. He doesn't care if you are educated on how to efficiently prepay it. So if you have a mortgage payment, and let's say it's $3,000, right? Simple numbers. You pay it once a month, but you aren't realizing that interest is compounding every single day. Or if you're making more frequent payments toward that mortgage, say it's $1,500 every 2 weeks, the same $3,000, but you're making more frequent payments, it helps chip away at that debt. So, we had a buddy make a calculator to show the numbers, because I can tell you, okay, $500,000 mortgage, bi-weekly is going to save you, if your mortgage is 4%, easy $80K off the top. That's going to be
by making more frequent payments,
but the same amount of money. So, but now if I tell you that, you're like, that doesn't make any sense. But then if I show you, like, okay, here's a calculator, you plug numbers in yourself, you tell me the numbers. I'm like, damn, 84,000? Yeah. Wait, and all I do is make one call to my mortgage lender and change my, yeah. Oh, okay, done. So that was separate to trading, but that was recent. And we did it pretty hard for like a month. It was like every day we just kept hammering on all these people that were saving $50K, $100K, $150,000 over the term of their loan and cutting up years and years of their mortgages. That was short term. I think the bigger picture long term is that this little thing, again, I don't know if they're going to be able to see this on the podcast, but it's a little stress ball with $100 Franklin.
I'll put a picture somewhere. Yeah.
Yeah. So the biggest thing is that most people's misconception with growing an account is they have this imaginary number in their head, 10,000, 100,000, 25,000, whatever number they need to start with. And they think they're going to magically grow this number into $1 million in 10 years by just profits. And you could do that. It's going to take a really long time. You have to be like a brain wizard. But what we do is, we have our guys save $100 a week. $100 a week is $5,200 a year. Pretty much max out your Roth IRA. So if you're on Robinhood with $10,000, you make $10,000 in a year. You Uncle Sam, whatever your tax bracket is, on that $10,000 means. If my guy in Trading Experts is trading his Roth IRA, which is tax deferred and tax free when he pulls it out, he makes $10,000. He owes Uncle Sam $0 this year, and then he owes Uncle Sam $0 when he retired. Yeah. So, you can be the wizard and turn 10 into 20 in a taxable account, and then end up paying the government $3,000, $4,000, $5,000. And you got 15. Well, my guy's got 20 now. He's adding 5,000 years. So now at the end of the year, he's got 25. You got 15. And now let's do this game again. You make 10,000. He makes 10,000. Okay, now you're at 25 year two. My guy's now at 45. Now we're only doing year one, year two. Now scale it out 30 more years. This guy's got $2, $3, $4, $5 million tax-free, tax-deferred. You can take it out day one and buy a Bugatti and almost nothing. Or you have the guy who's doing it backwards, paying all this money in taxes and then complaining about it, doing it the way that he taught himself because he's going to be this, mastermind of the market. Right. Longer term, the fact that we have our guys being more active from a swing trading standpoint in their retirement accounts properly, and then investing more long-term in the taxable accounts, they will destroy I don't care if you have the best trader on a prop firm, they're going to destroy them just because of the taxes. Right. If you're paying 25% taxes, I can make 1% and you make 26% and I make just as much as you. So that's like the real numbers that most people don't look at. They just look at like, I want to turn 1,000 into 2. It's like, okay, well, you just did, you all percent $500, so you only made 500. So a lot of it is the more granular stuff, but we get to that at a certain point. I can't hit you with that day one because it's going to go right over your head. Right. But once you get to that point where you understand the trade, you've built up enough of your own knowledge, then it's like, and then that flip switches where in the beginning, there was actually a member of ours, his name's Hess, and I talked to him for 2 years, and he was a perfect example of this. Has money, just bought a sick home in Denver, $600,000 home, bought it cash, always had money. and he was in like getting started, and he made like $5,000 in one day. And I'm like, dude, that's awesome. He's getting made in my Robinhood account. I'm like, what about your Roth? He goes, no, that's my long-term account. And he had like some shit. I don't know if I can curse.
Yeah,
It is like trash, like penny stock. And he's like, I'm holding it long-term, blah, blah, blah. Same story always. Week later, the stock's down like 50%, and he sells it. And I hit it, and I kind of stuck the knife in. I'm like, hey, I just thought. He's like, no, man, I sold it. I'm like, okay, let me get this straight. You made $5,000 in your taxable account, which was sick, but you owe Uncle Sam money on that money, right? Now, your long-term account, this long-term investment in your tax-deferred or tax-free account that has no benefit to long-term, you just took a 50% loss and you can't even write off. So you did it double backwards. Now, if you had done this reverse, you would have lost money in your taxable account. You could have wrote that loss off, and that $5,000 would have been tax-free. Like, doesn't that make more sense? Or do you just like to give Uncle Sam money? And he was like, and in the moment he was pissed because that was like too nice because he was doing it backwards. Yeah. And he was pissed for like a week or two. And then like maybe a week or two later, he was like, you know what, man? He's like, that really pissed me off. But he's like, that was right. And now, you know, like I said, he's still got money. He's doing it he's doing it this way now. And it's just so much more beneficial, so much easier. But for some reason, especially male dominated, we just want to do it the hard way. You know, we don't listen to our parents. We want to figure it ourselves. And it's like, why did I just put that switch off? Like, it's so easy. But, you know, you got to learn it the hard way sometimes.
Yeah, us male are a little bit hard-headed. So, all right. So, for now, anyways, I'm done with the trading expert questions. I want to go into a little lightning round before we sign off for today. And basically, I'm going to be asking you 7 questions, and these 7 questions are from the free programs that you guys have offered. And you'll have 30 seconds to answer these. And obviously, you should probably answer them in 10 seconds because you wrote them. So just try to like answer them as quickly as possible in layman's terms, as simple as possible. All right. So let me get ready here. Gotta get my Steve Harvey mojo and read these questions pretty fast. All right, starting in 5, 4, 3, 2. All right, I'll start it when I ask the first question. What is a market order?
Market order is you want to buy a stock, you hit buy, and it buys at the market price.
Okay. What is the S&P 500?
S&P 500 is the 500, biggest companies in America.
What is a stop loss?
It's an order that you put in that if a stock goes below a certain price, it would market you out.
What is a 5-1 risk reward?
So for every dollar that we risk, we look to make $5 on what we risk.
What is the difference between day and swing trading?
Day trading is you buy and sell on the same day. Swing trading is when you buy and hold for more than one day.
Time. Damn, 2 questions left. I'm going to ask it to you anyways because those are long questions. And you basically, it's funny because we spoke about it a little while ago. What account would you look to hold long-term investment in from a tax standpoint?
I think you can answer that. What do you think? What do you think the answer is?
Just had it too.
Taxable.
And then, which account would you look to hold to trade more actively in a tax standpoint?
So again, we're gonna do some asterisks. If you are making money, if you're actually you've made money last year, you made money the year before, then yes, trading your retirement account and holding your taxable account will be more beneficial from a tax standpoint. If you're losing money, and to be honest with yourself, you don't have to tell me, you don't have to tell you, right. You're saying, you know you're losing money. Do not do that. Hire an advisor, DM me, I'll manage your real money, and then you can do your own thing in your trading account and you can write off those losses. But that's the one main thing, because especially for our guys, that strategy works if you make money. If you don't make money, like most people who want to do it their own way, then you got to do what everyone else does. Lose money in your taxable account, write it off the next 10 years, and put the boring stuff in your IRA. But if you can actually make money, you learn from us, you do it your own way, then yes. Longer term, taxable, think Robinhood. Shorter term, think Roth IRA. Think your E-Trade Roth or your Fidelity account, or even Acorn's a great app, but that you can't trade. That just helps you build up the account.
Amazing, and I'm writing this stuff down, even though I just read it. All right, and yeah, that's pretty much it for today. Ben, any last words for the people listening on YouTube and Paradisos, all our fans out there? Anything you want to say? Any closing thoughts?
Yeah, if there's, like I said, if there's anything that we can do to improve, again, DMS at Trading Experts, always open to hear, your opinions. If you guys have any questions, realize I will always give you, my partnership will always give you the real answer. It's more than likely not going to be the answer you want to hear. We will always give you the truth. If the stock is trash, we're going to tell you it's trash. If the stock is great, we'll more than likely buy it with you. So just remember, if you take your ego out of the equation, investments become a much easier, ballpark to play in than when you walk with the chip on your shoulder.
Amazing. Ben, thank you again, bro. You are the freaking man. I can't wait to sit down and just have a beer with you and continue to talk. We always have some awesome conversations. Thank you again for just sitting down and taking the time and speaking to everyone and just dropping some freaking knowledge, bro. Dropping some knowledge on everybody on trading, life, books, cars, everything, man. I really, really appreciate it.
All right, man. I'll see you June 15th in Brooklyn for Shakes on.
Definitely. Ben, thank you so much. And for everyone listening, thank you so much for tuning in and listening to Ben and I talk and just listening to the knowledge this guy has. And hopefully we can do a part 2, part 3, maybe even a series where we can sit down and just talk about trading nonstop. For everyone out there listening, thank you again. Check us out, Paradisos Podcast. Instagram, www.paradisos.world, and Paradisos101 on Twitter. Until next time, God bless you all. Goodbye.